The following details of a company for the year ended 31st March are given below. Operating leverage is 2 is to 1, combined leverage is 2.5 is to 1, fixed cost excluding interest is 3,40,000. So this is nothing but the fixed operating cost. Sales is 50 lakhs, 8 percentage debenture of rupees 100 each. So the total value of the debenture is 30 lakh 25,000 and the coupon rate is 8 percentage. Equity share capital is 34 lakh and the face value of one share is rupees 10. So number of shares outstanding will be 3 lakh 40,000. Income tax rate is 30 percentage. The requirement of the question is to calculate degree of financial leverage. They are also asking us to calculate PV ratio, which is nothing but the contribution to sales ratio. And we are also supposed to calculate the earnings per share of the company. Third requirement is if the company belongs to an industry whose asset turnover ratio is 1.5 times, does it have a high or low asset turnover? So that is something which we need to calculate. And at what levels of sales EBT of the company will be equal to 0. So these are the four requirements of the question. So let's solve the first requirement, DFL, degree of financial leverage. So in this question, they have given the operating leverage is directly given, combined leverage is directly given. We know that degree of combined leverage is equal to, it is nothing but degree of operating leverage into degree of financial leverage, right? So what is combined leverage? It is 2.5 times given in the question. What is degree of operating leverage? It is 2 times given in the question into what is the DFL? DFL is something which we need to calculate. So DFL will be equal to 2.5 divided by 2. We get 1.25 times. So degree of financial leverage is equal to 1.25 times. The second requirement of the question is to calculate PV ratio or contribution to sales ratio and EPS, right? So for calculating the PV ratio, what are the formula? It is second requirement, PV ratio and EPS. For calculating the PV ratio, we know that the formula is contribution divided by sales. So PV ratio is equal to contribution divided by sales. In this question, we have the sales figure, which is 50 lakhs. But contribution is something which is not directly given in the question. So first we need to calculate the amount of contribution, right? So how can we do that? We can use DOL formula because the formula for DOL is contribution divided by EBIT, right? So from there on, we can calculate the amount of contribution and divide it by sales so that we get the PV ratio. DOL is equal to contribution divided by EBIT. Do we know EBIT? No, EBIT is also something which we do not know in this question. So what we can do is we can rewrite the formula as DOL is equal to contribution divided by what is the formula for EBIT? EBIT is nothing but contribution minus fixed cost. So, but we know the amount of fixed cost in the question, it is directly given as 3 lakh 40,000, right? So now we have all the relevant figures for calculating the amount of contribution. So DOL is equal to 2 times is equal to contribution divided by contribution minus fixed cost is 3 lakh 40,000. From this equation, we can calculate the amount of contribution. So 2 into contribution minus 2 into 3 lakh 40,000, we get 6 lakh 80,000 is equal to contribution. So amount of contribution is equal to 6 lakh 80,000. So now we have the amount of contribution. We can just apply the amount of contribution in this formula. So PV ratio is equal to amount of contribution is 6 lakh 80,000 divided by the amount of sales is 50 lakhs, which is given in the question into 100. So 6 lakh 80,000 divided by 50 lakhs, we get 13.6 percentage. So that is the PV ratio. The PV ratio is equal to 13.6 percentage. Now we have one more requirement that needs to be solved. I mean, we have one more thing that needs to be calculated in this requirement, which is earnings per share. For calculating earnings per share, we need to prepare the income statement, right? So in this question, what we can do is there are two methods of doing it. One is we can take it from the sales. We have the sales figure. From sales, subtract variable cost, we get contribution minus fixed cost, EBIT. We can do like that. Or else we can directly start from EBIT and we can do that. So what I'm going to do is I'm going to directly start the calculation from EBIT. So here calculation of EPS. So let me write it. Calculation of EPS, and we are going to start from EBIT and not from sales. So what we can do is first we can calculate the EBIT. How to do that? We know the amount of DFL in this question. So I'm using the DFL formula. DFL is equal to EBIT divided by EBT. Right. Now what we can do is we can slightly change the formula. We can rewrite the formula as DFL is equal to EBIT divided by, this EBT can be written as EBIT minus interest, right? So now what is the formula for what is the amount of DFL that is given in the question? No, it is not given. We calculated DFL is 1.25 times. So DFL is equal to 1.25 is equal to EBIT divided by, again, EBIT minus, what is the amount of interest in this question? The company has borrowed 8% debentures. The total value of the debenture is 30,25,000. So 30,25,000 into 0.08, we get 2,42,000 as the amount of interest. So 8% of 30,25,000. That gives us an interest of 2,42,000. So EBIT minus interest is 2,42,000. Now let's calculate EBIT by using this 1.25 into EBIT minus 2,42,000 is equal to EBIT. Now, when you solve this equation, 1.25 into EBIT minus 2,42,000 into 1.25, we get 3,02,500 is equal to EBIT. Now let's bring this EBIT to this side and let's bring this 3,02,500 to the right hand side. So we get 0.25 EBIT is equal to 3,02,500. So 3,02,500 divided by 0.25 is equal to 12,10,000. So EBIT of the company is equal to 12,10,000 is the EBIT. From now onwards, let's calculate the net income and divide it by the number of outstanding shares. We will get the EPS, right? So now EBIT is equal to 12,10,000 minus the amount of interest. What is the amount of interest that we calculated? It is 2,42,000, which is nothing but 8% of, 30,25,000, right? So 12,10,000 minus 2,42,000, we get 9,68,000, which is nothing but EBT of the company. So EBT is equal to 9,68,000 minus tax. What is the tax rate applicable? The applicable tax rate is 30%. So tax at 30%. So 30% of 9,68,000, we get 2,90,400. So what is the EAT or earnings after tax? So earnings after tax will be 6,77,600, which is nothing but 9,68,000 minus 2,90,400. Now, what is the number of outstanding shares? So divide this earnings after tax by the number of outstanding shares so that we can calculate the EPS. Number of outstanding shares is equal to, in this question, the total equity share capital is given as 34 lakh and face value of one share is 10. So if face value of one share is rupees 10, then value of how many shares will be equal to 34 lakhs. So 34 lakh divided by 10, we get 3,40,000. So that is the number of outstanding shares divided by 3,40,000. So we get EPS of the company is equal to rupees. So 6,77,600 divided by 3,40,000, we get rupees 1.99 per share. So this is the amount of EPS. Now, the third requirement of the question is if the company belongs to an industry whose asset turnover is 1.5 times, does it have a high or low assets turnover? Now, what is the formula for calculating asset turnover? Asset turnover is calculated as the relative measure between total sales divided by the total assets. So let's solve it over here. Third requirement. Third requirement is to calculate total asset turnover ratio. See, for any turnover ratio, the numerator should be sales, except for inventory turnover ratio. Only while calculating inventory turnover ratio, the numerator will be cost of goods sold. But for all the other turnover ratios, the numerator will be sales. So sales divided by total asset. This is the formula for calculating total asset turnover ratio. Now, what is the amount of sales given in the question? It is 50 lakhs. It is directly given 50 lakhs. What is the total asset of the company? The total asset is not directly given in the question, but still we can calculate it. See, in the balance sheet side, we have liability and asset side. So here we have on the liability side, we will have 8% debenture of 30.25 lakhs, and the company has also raised an equity share capital of 34 lakhs, assuming there is no current liability in this company. So what is the total liability side? 30.25 plus 34 lakh, we get 64.25. So this is the total amount of finance the company has raised, and what the company will do with this 64.25 lakhs rupees. So this 64.25 lakh rupees will be invested in the assets of the company. So the total asset of the company is 64.25 lakhs, right? So the total sales is 50 lakh rupees and total asset is 64.25 lakhs, which is nothing but 64 lakh 25,000. So what is the total asset turnover? We get 50 lakh divided by 64 lakh 25,000. We get 0.77 times. So what does it mean? It means that for every 1 rupee of investment made in the asset, the company is generating a sales of only 0.77 rupees. I'm repeating it again. For every 1 rupee of investment made in the assets, for every 1 rupee of investments made in the assets of the company is generating a sales revenue of only 0.77 rupees. Whereas other companies in the industries, for every 1 rupee invested in the amount of asset, other companies in the industries are generating a sales of up to 1.5 rupees. So other companies in the industries are generating a sales of 1.5 rupees for every 1 rupee invested in the asset. So this company, what is the name of the company? It is not given, but this company is not making use of its assets properly for generating sales. Whereas other companies in the industries are making effective use of their assets for generating sales. So here the asset turnover of this particular company is less than the asset, it is less than the average asset industry turnover. So the asset turnover of this company is lower than the industry asset turnover. So that is the conclusion. The fourth requirement of the question is at what level of sales EBT of the company will be equal to 0, right? So now let's do the reverse calculation for these kind of questions. So here they're asking us to calculate at what level of sales the value of EBT will be equal to 0, right? So let's put EBT is equal to 0, right? Because that is what the question says. At what level of sales EBT will be 0. So let's put EBT is equal to 0. And what is the amount of interest we calculated? It is 2,42,000. How did we get 2,42,000? This 2,42,000 is nothing but the company has borrowed 30,25,000. Right, the company has borrowed 30,25,000 on which we are taking 8% interest. So interest amount is 2,42,000. So EBT should be 0 and interest amount is 2,42,000. And if we want the EBT to be 0 and if interest expense is 2,42,000, then what should be the EBIT? The EBT will be 0 if EBIT is exactly equal to the interest amount, right? So EBT should be 2,42,000 and interest is 2,42,000. So EBT will become 0. Now, what is the amount of fixed cost that is given in the question? It is 3,48,000 directly given in the question. Now, what will be the contribution so that EBT will be 2,42,000? So 2,42,000 plus 3,40,000, we get contribution of 5,82,000. If contribution is 5,82,000 and the fixed cost is 3,40,000, only then EBIT will be 2,42,000. And if EBIT is 2,42,000 and interest is 2,42,000, EBT will be 0. Next, how do we calculate the variable cost in this question? Listen, we know that in this question, we already calculated the contribution to sales ratio in the first requirement. What is the contribution to sales ratio? It is 13.6%. We calculated it somewhere over here. PV ratio, yeah. The contribution to sales ratio is 13.6%. What does it mean? It means that out of the total sales, contribution is 13.6%. So what is the remaining 86.4%? The remaining 86.4% is your variable cost. So now what we can do is, I don't know the sales. I don't know the sales amount. So let me keep it as X. But out of the sales amount, I know that 13.6% is contribution, which means this 5,82,000 is 13.6% of sales. And remaining 86.86 remaining 86.4% is nothing but the variable cost, right? So what do we know now? So we know that this 5,82,000 is 13.6% of sales. So let's calculate it. So let me put it over here. If 13.6% of sales is equal to 5,82,000, then what will be the total value of sales? So it will be 5,82,000 divided by 0.136. We get the amount of sales as 42,79,411. So this is the amount of sales. So the amount of sales is 42 lakh 79,411. From this, let's subtract the variable cost. So that is nothing but the balancing figure, right? Minus 5,82,000, we get a variable cost of 36,97,411. So when sales is equal to 42,79,411, EBT of the company will be equal to 0.